Yeah, Friday. What's up, everybody? Friday morning. Welcome to today's edition, Daily Market Commentary. Hope everybody had a phenomenal day yesterday as we saw the markets take a little bit of a roller coaster this week. It's been one of the weeks that I like to say full of sound and fury, but signifying nothing. As we're sitting at about 45.63 this morning. The S&P down 24 points from yesterday's all-time high retest. We'll call it an all-time high retest. So let's go ahead and get started looking at our four major markets. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell. Why don't you do me a favor, if you wouldn't mind? Put a comment down below. What is your favorite market to trade? Is there something you look at every day? For me, the four that I look at every day are the ones that you see me talk about. Look at these four no matter what. But doesn't mean that I'm, trading these four every day because the market's got to give me the good opportunity. So let's go ahead and dive in. S&P. So looking here at the ES, we have a couple of areas yesterday that we kind of bounced off of that are worth taking a look at. So the first one here on a 15-minute chart, we had looked at this little area in here. The problem was that we came close to it and didn't get filled. And so then we came into it a second time and got a little move away. And so really that makes this more of a confirmation entry. Now, that level is not as clean as the 15-minute level below there, which is a rally-based rally above a pivot low. We did get a decent little move off of that area. Then it moved us into this all-time high area. You saw that the market hits this all-time high, and in the overnights, we have really sold off in the overnights from there. Now, the markets are reacting a little bit to earnings reports from after yesterday's close. Which we'll talk a little bit about some of those stocks that announced earnings yesterday and what they look like. And so now what I want to do is remove all of these levels. I want to remove all those areas, and I want to look at this 4-hour chart. And the 4-hour chart is telling me that we are losing a little bit of momentum, losing a little bit of steam, right? If I put my indicator on here, which typically shows oops, I don't want to delete it, which typically shows my momentum, you can see that my momentum is drastically coming down here on the S&P, while my prices are continuing to go up. Now, that momentum that's drastically coming down is because it's a reaction off of this near parabolic move up that we had that caused it to pop straight up. And so the momentum shift, momentum going down while prices are still going up, isn't alone indicative of saying that we're gonna roll over. But for those of you that regularly, watch the DMC and are in the live trade rooms at tradersarmy.com, you see that we talk a lot about the fact that when the S&P puts in a new all-time high, it typically pulls back for a few days. Not always, but typically gives you a little bit of a pullback. And so I wouldn't be surprised to see price coming back just a little bit. So let's take a look at an hourly chart. If you were to try to take this to the downside, where might be a decent entry? Well, I think you've got a decent breakdown entry below 45.15. I think you're also building a case for a breakdown below 45.44. Inside of that region. I think you can get a breakdown trade if you get proper basing. Without the proper basing, none of that is going to be a valid opportunity or a valid entry. Now, we're already down 24 points today. So by the time we would make it down to there, we would be down 43 points by the time we would make it down to that level. And so that would be one heck of a down day and really a weak way to end Friday. So I don't know if we're going to see that come to pass, breaking through that level. Now, on a much smaller time frame, 15-minute level, we are bouncing off of, at this very moment, a pretty decent area of demand. Now, we've already hit it once. With this long lower wick, we rallied off of it. This is now the second time into that level. So below that, I have this little area right here, which was formed right around 5 o'clock in the morning, that could serve as a small reversal. So I'm going to put both of those in there. If we are unable to bounce off of that lower level, that 45.52 by 45.50, I think there's a chance that we base in here and then you see price move down. Looking at the NASDAQ, I think a very similar picture. If I take this to a smaller time period, looking at, say, the 15-minute chart, I don't actually have as clean of a level down here for that demand. My supply right here is actually a good little area of supply just above me. There could be a little reversal off of this. And so if I get this video out soon enough, you may be able to take advantage of that move, as that was a level formed just in the last 15 minutes or so, 45 minutes or so. I'm recording this at 5:42 a.m. Central Time, so this level could have already been hit by the time you watch the video. We'll see what it looks like at that point. Crude oil, moving over to crude oil. So looking at crude, we had been taking a look at crude, that it's going to continue to move a bit higher. Daily chart still continues to be bullish. We got a decent reversal day yesterday after a 1-day pullback. But if we look, we're not really getting much longer than 1-day pullbacks in crude oil on this most recent run higher. And I've said it now for a while, I think that there's kind of a price magnet up above us. And so that tells me that I want to get long at quality areas of demand when the market's giving me those opportunities. And so right now, you've got a potential breakout above this 83.28 region, call it 83.50, which would be a breakout above the Globex high. Now, I tend to look for traps when that happens, right? And a Globex trap would be, is there a supply level over here to the left that can cause price to drop once we break above the Globex high? And I don't really see a good quality area of supply, which means we would have room to roam on that move. Below us, we have a demand zone right in here where we could see a turning point right in there. All right. And then last but certainly not least, we have gold. And looking here at gold, this tells you probably shouldn't be trying to trade in between these zones. There's just not a lot in gold to look at as an opportunity. I think that it's chopping fairly sideways and really telling you should probably just stay away. Don't mess with me. I'm like a dangerous flower that might look pretty, but don't come touch me. And that's kind of what gold is right now. And so I'm not doing anything with gold today. I'm going to let it do its thing. I know a couple people have been trading iron condors in this, going sideways, and that one should look and still be working out pretty well. Now, as far as our stock of the day, I want to talk about our FANG stocks, and the first one being Apple. And the reason I want to start with Apple is because Apple is gapping down this morning. We're going to gap down. Looks like we're going to gap down in this 147 kind of area in post-market trading down into this region in here. Is where Apple looks like it's set to open somewhere around here, which is not a bad, not a humongous gap. There's nothing gigantic about that from a gap perspective. We did have a bit of a pre-earnings run, and so the earnings hit right on the expectations. Didn't see anything about revenues, but keeping an eye on, are we going to pull back to this area in here, old resistance acting as new support? There could be that setup for a potential trade off of a bounce from that level if you wanted to trade it after the earnings. Facebook continues to be pretty volatile, although a little pop up in pre-markets is trading up at 319, so we could see a little bit of a rally back up in Facebook. Microsoft is trading about where it closed after its earnings reports. It's trading significantly higher. This was a breakout trade that we talked about last week. So for those of you that are still in that one's still running pretty nicely. Amazon bounced off the area of demand. The earnings report for Amazon, we are going to trade down deep this morning. And I say deep, it's going to trade down almost $200 in Amazon, which is looks like about 7-8%. So 32.79 looks to be about where we're going to open, which would put us right in here as our opening price. So gapping off of this area of resistance down into this region. Now, there's an area of demand down here that I can't use again. And the reason I can't use this again is because we traded all the way to the bottom of that level. So if we open up down here at 32.79, somewhere in that region, you may have actually a gap, a fading of the gap right off the open. So keep an eye on that for those of you that do trade this one. If you're looking at a fading of the gap play right at the open, I think that could be a potential setup, opening in that region and then price rallying higher. I don't know that it would make sense to really touch this at a $3,200 stock on earnings day on a big gap. But if you are a little bit more okay with the risk, then go ahead and do that. So that's all I have for today, everybody. If you guys have any questions, as always, send us an email, support@tradersarmy.com. Till tomorrow, I will talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.